Ding ding, the day is done, and we closed below 42.24, and I made money on that shitty put that I held all day, which is actually the best part of everything that happened. But thank God that's over. That was the most boring drop ever. Like, the market went down 126 basis points today, but I feel completely unsatisfied. And I had puts for like 90 basis points of that. But pretty bearish end of the week, and VIX closing the day near its intraday high. So that's going to spook some old people into the weekend. They're going to be calling their financial advisors tonight and asking them a bunch of questions. So we ended up today kind of a little bit in between the median and bearish range and moved roughly in line with VIX at 125 basis points. So if you use like VIX 16 is 100 basis points, right? And then like VIX 20 over 16, right? It's like 125. And then, 32 would be like 200 basis points a day, so on. You guys get it. Anyway, I'm not going to call it until the member stream on Sunday at 12:30 p.m. But I think I win. I'm pretty sure. Yeah, I'm pretty sure I win this week. Best quant. I'm running out of room for the trophies too. ES continuing to fall after market close. Yields actually moderated a little bit today, but bond volatility, well, I don't know. It hasn't printed yet. Vol up. Yields kind of running away from that. We could probably expect some period of this occurring over the next month or so, provided we don't lose stability and the market doesn't crash. But this is kind of what happened. So you see how vol is now above 0% on the spread. So this means that buying bonds and buying long volatility are incentivized, right? And I'll put out a clip of me explaining this in more detail from last night. But if you looked before the COVID crash, this kind of happened too, right? As vol moved above zero and bonds kind of tried to run away from it, and then obviously volatility throughout all of that picked up a bunch, and then finally it normalized after the market crashed. But this went on from roughly like Feb SLD into the actual crash, which occurred in March. Well, I guess it started at Feb SLD, right? So it was like here. This was Feb OPEX, where it started crashing, and then it kind of finished up around the end of March. Anyway, I mean that doesn't mean the market's gonna like crash on Monday or anything. It's just a cool thing to note right here on the OPEX expiration. Anyway, 3-month correlation picked up today, but 1-month correlation actually dropped. So a little bit of vol control, but in the shorter term, still no print on that. We've got correlation with VVIX and VIX futures. The short-term VIX futures is picking up, as is correlation with spot VIX. Out on the weekly, we should see that continue as we move into a higher volatility regime. That's about it for the market stuff. I mean, I'll have more when we have data. This is notable on the weekly and on the monthly. The SPX has failed its long-term trend, and on the monthly, we're getting a continuation of 3 red months in a row. And yeah, I mean, I give technical analysis a lot of shit, but this one's pretty rarely wrong. Very, very rarely is SPX ever red for 3 for an entire quarter, basically. There's very few instances of it happening that don't lead to a market crash or a severe correction. And going all the way back, I mean, you can go back forever, and it's exceedingly rare to have 3 continuous down months in the market without it being followed by a correction into a bear market or an actual crash. So I thought that's pretty cool to point out. It doesn't really mean anything, but it's cool. GME tips are converging. Not a lot of covering in IJH yet, but a lot of covering on XRT today, and not a lot of covering on the underlying. Still a shitload of covering to go. Remember that when everything is covered and GME becomes liquid again, it should be roughly around there, right? And then the yellow line's gonna move up to there, and the red line will move up to like right there, right? So still a ton of covering. The short positions are super compounded. We'll see if that's realized or not. I don't know what XRT being back on Reg Show is going to mean for that, but I think the fact that they covered on XRT today is a good sign. Even though it didn't lead to a ton of price improvement, it shouldn't until we get into the actual T+2 period. and all the short calls from this week fall off. And once the market maker like deleverages that hedge as they're covering, you get that big volatility spike. It's fun times. I think that's about it. Fubo got shorted with the drop in Russell today. That might be another one where earnings are kind of more important than the OPEX, similar to Upstart. Siri's getting the ever-loving shorted out of it. They eased off of the borrowing pool a bit, but they're still shorting the shit out of the ETFs. This one might run. I mean, its prior run was kind of right before OPEX in July, but it kicked off like with the ETF FTDs, right? And this is kind of kicking off with the ETF FTD period. And so we'll see if we get like a big run next week. But I think Siri and GME look kind of good for that. And that's about it. Thank you guys so much for tuning in. I'll see you Sunday morning for the members stream at 12:30. I hope you all have a great weekend. Later.